Thanks for joining David, Kevin, and myself for the market update for the month of October. We hope all of you had a fantastic Halloween. I know we sure did. All the markets were up slightly again in October, which makes all of us happy. The S&P 500 was up 0.46%. The S&P TSX was up 1.07%, and the MSCI EAFE was up 0.14%. The guys are going to delve a little bit more in detail about what else has happened in the market, but as always, take care, and if you need us, give us a call. Bye-bye.
At its October meeting, the Bank of Canada lowered interest rates by 50 basis points, lowering the rate to 3.75% currently. This marks the fourth consecutive rate cut by the Bank of Canada. During the policy meeting, the Bank of Canada used language to justify its oversized rate cut of 50 basis points of slower inflation, a weakening economy, and a softer labor market domestically here in Canada to justify that 50 basis points rate cut.
In the U.S., the Fed is set for its next rate announcement this coming Thursday, November 7th, which is also 2 days after the U.S. presidential election. And though most economists do anticipate that the U.S. Fed will announce another rate cut, they don't believe it'll come in the form of such a large rate cut as they did at their last meeting, and it will most likely be about 25 basis points.
The reason we've seen so many rate cuts in Canada is the fact that the economy is slowing in tandem with inflation also being at target now. Inflation in Canada is roughly right around that 2% number that the Bank of Canada wants to see it at, so the battle for fighting inflation has clearly been won. Now, the next agenda item for the Bank of Canada is making sure that the economy stays somewhat strong. The economy in Canada has experienced a little bit more muted growth in recent months. For example, in August, it was estimated that the economy posted no growth in Canada, and in September, the economy only grew at 0.3% for an annualized rate of growth of only 1% during the third quarter. So the Bank of Canada is clearly trying to navigate that soft landing for the economy. They've sort of won the inflation battle, and now they're just making sure that they don't leave rates too restrictive or too high for so long that the Canadian economy rolls over. With a lot of mortgages maturing in 2025 and 2026, it's important that the Bank of Canada sort of thread the needle and get the interest rate policy correct so that a lot of these households that are coming off of 2% mortgages that they took out in 2020, 2021, that are up for renewal next year, they're able to renew into a rate that certainly will be higher than those pandemic ultra-low rates, but that's something that's digestible for our economy so that we don't have a lot of households facing significant problems in the coming years.
Down south, the U.S. continued to demonstrate its relative strength, expanding in the third quarter at a pace of 2.8%. Now, this continued growth was largely due to consumer spending, as personal consumption expanded at 3.7% by the end of the third quarter. Moving into September, that personal consumption continued to grow and further 0.5%. However, it's worth noting that Americans are continuing this spending rate by dipping into their own savings to access money and not using new money. Now, this was shown in a report that highlighted the U.S. savings rate has decreased to the lowest amount since 2023.
As we sit here and film this market update on November 4th, tomorrow obviously is a big day down south in the U.S. with the presidential election unfolding tomorrow on November 5th. By the time this video comes out later this week, we will likely know who is going to win the White House. And while that, speculation around who's going to win the election may lead to a little bit of volatility in the markets, the main thing to remember is that it all comes back to economic fundamentals. No matter whether it's Trump or Harris who wins the White House, they may have slightly different policies as it relates to domestic affairs or international affairs. And that could favor certain sectors in the economy, depending on who wins and what their policies are. But the main thing is interest rates are coming down, financial conditions are getting easier, and this is amid lower inflation. So inflation is not nearly the concern it was 2 years ago, and that soft landing that everyone is sort of was thinking would not happen back in 2022 seems to be unfolding before our eyes nearly 2.5 years later from when inflation sort of started to rear its ugly head. Inflation's no longer at 9%, it's down in the lower 3% in the US and it is likely to get down closer to 2%. It's already at target here in Canada. So I think the main thing is just looking forward, maybe not who's in the White House, but what actually is happening from an economic perspective.
Yeah, I couldn't agree more. If you guys do have any questions, please feel free to reach out to Harry, David, or myself at any time.